Good morning, everybody. Welcome to the Morning Blast. It is Friday, the 20th of March, all day, for those wondering. This is the podcast where myself, Ryan, and of course, Michael, give a very candid takedown on markets. We choose a couple of topics of the day, maybe a little rant, a few swearing words. Yeah, just to try and put a bit of value into your day and put a smile on your face. I seem to be suffering from a shit ton of hay fever after the one sunny day of the year. Also, Michael, you'll love this. 20 minutes sat in a beer garden yesterday. I've got sunburn. I thought you would like that.
Well, very good morning to you, Ryan. Good morning, everyone. Sadly, I am in a similar boat. I had two beers at the oyster shed yesterday, and my head is looking slightly tomato-ish, shall we say.
Well, yeah,
the lack of hair is really starting to be
I
felt.
didn't want to say anything, but yeah. No, I looked at myself in the mirror this morning. I was like, oh, for fuck's sake. 12.
If anyone knows anyone that sells a good sort of Panama hat or something like that, please send them my way.
Do you know what? I've got a lovely fedora that it would suit you.
Oh, well, there we go. Next time I see you, bring it along.
And it is yours for £500.
I'll buy you a pint instead.
I was going to say a kiss on the cheek, but there you go.
Oh, no, I'd rather pay 500 quid.
Oh, liar. Speaking of people that suit a very fetching fedora, and obviously we've gone massively off topic straight away, let's have a roundup.
I thought you were going to say something about Clive kissing people on the cheek for a second.
No, not my cheek. Well, what cheek? He misses and goes down the middle. God, Ryan, get your mind out of the gutter.
This is really deflated.
Right. Hang on. Right. Composure. Right. Speaking of Clive Lambert kissing, right. An update from Clive Lambert on pricing and technical levels. So he's going to. I'm scared to check WhatsApp. He's going to be.
I hope he's not listening.
I really hope he isn't. Right, an update from Clive Lambert, our dear friend over at Futures Techs on price levels and price action and levels to watch. S&P posted a doji yesterday, is still trying to decide what to do about hitting its 200-day simple moving average. Personally, if it gets there, I will be buying. Well, to be fair, I'm already buying, but it has steadied the ship after a down day on Wednesday. 67.19 and 67.36 are the levels to reference on any recovery to the upside. The DAX saw red again yesterday, but the June contract is small bid so far today as we've gone to print. FTSE futures holding above the 10,000 level for now at least. Well, as we've gone to print, God knows where it'll be when you listen to this. Bund futures saw green rallying from
pixel time, as some people like to say.
Well, our dear friends at News Corp love to say at pixel time. Still not quite sure what that means, but there you go. Bund futures saw green rallying.
Nor are they.
Bunds saw green rallying from a low of 125 spot 46 yesterday on the ECB presser. T-notes posted a hammer, but there's been no follow through yet today from the bulls. Eurodollar put in a decent slug of green on the daily chart yesterday, rallying to 1 spot 16.16. Cable also saw some green and broke the top line of the downtrend channel that we've been defining things of late, or that has been defining things of late. So the dollar bears are waking up, it seems. Obviously, Michael will go into more detail on the BOE hawkishness later on in a second. Bitcoin got down to 68,800, back above 70,000 this morning though. Gold, the yellow metal, and silver both saw shakeouts yesterday, but then a recovery. So did copper, for what it's worth. Oh, we're going to come on to copper in a second. Just each of my own book there. In gold, we'd like to see 47.40 and 47.82 retaken to give the bull some hope. Speaking of copper, London copper, LME copper, also recovered from a low of 11,754 yesterday. You can thank me for buying the dip there. Back above 12,075. In energy space, Brent crude got up to $119.13 yesterday, then gave it all back to leave a big shooting star reversal candle on the daily chart. Again, I love Clive like a brother. Well, not a brother, more one of those like slightly creepy uncles. But I'm not a big fan of doing technicals in these markets in energy, but that's just me. Speaking of Brent, though, and thinking of levels to watch, 108.29 is a Fibonacci level in play today. 96.28 is a downside target if we see a move from the bears. WTI, that got up to $100.48 yesterday, where sellers responded. 91.32 is a support to watch in that one. May Henry Hub got up to 3 spot free spot 228 yesterday, where sellers return. Free spot 291 is resistance to watch there. We remain sided with the bears while that's sitting above. TTF gas, so the European benchmark gas, up big yesterday. Obviously, lots of gas news coming out, getting up to $74 on the big figure before selling off to 60 spot 54. Wednesday's high was 56.37.5. So this gap support is there, protected by Fibonacci support at 57.22. And finally, from Clive, EU carbon markets responded to news this morning with a big rally from 63.10 up to 69.80 as Clive went to print. And that's it from Clive, my creepy uncle. Thank you very much.
Oh, are you done?
I am.
Oh, sorry, I was distracted by someone being very moronic and saying stupid things on our company Slack, which is always good.
I thought you were
where should we
about
start?
On the
Well, someone else being moronic.
Again, I said TTF, I said dollars, I meant euros, as Clive rightly said.
Oh, Ryan, come on. You've done that twice in 2 days now.
But I was in a beer garden yesterday. I had 1 pint of cider and it all got up to my head. And
it wasn't that Ponzi pink cider that you have to have in your special glass again,
I might have had one of those, yes.
I fucking knew it.
It's a luxury cider when it comes in a wine glass. If anyone from back home in Somerset could see me now, I'd be lynched.
Deary me.
Anyway, what's going on in markets?
Yeah, well, we'll do the geopolitical stuff in a minute because I think we should cover that anyway. But let's start with the policy decisions that we had yesterday, because in true central banking fashion, the Bank of England have been dealt pretty poor hand, and they have utterly fucked it up in a way that only they can do. The MPC holding bank rate steady at 3.75% yesterday, as expected, but everything else was pretty hawkish. The vote to stand pat was actually 9-0, which was the first time that the MPC has voted unanimously in favour of a policy action since all the way back in September of 2021. The guidance was also pretty hawkish, at least relative to market expectations, with the MPC noting that they stand ready to act as necessary to ensure that CPI remains on track to meet the 2% target in the medium term. They did not produce any new economic forecasts yesterday, but they did outline their expectations as to where CPI may head in the near term, noting that they expect CPI to be 3% in February. We get that data next week. And then CPI to rise further to 3.5% in March, based on where energy prices currently trade, although that is, of course, subject to change. And then when you look through the individual paragraphs in the minutes where individual policymakers are making their assessment of things, the hawks are again concerned about the risks of inflation persistence, the risks of second round inflationary effects. And you even had Catherine Mann talking about the potential need for a rate hike. Clearly, all of this went down like, well, a bit of a lead balloon with financial markets. Cable did rally about 2 big figures on the back of this much more hawkish than expected decision. But it was really the sell-off in gilts that caught the eye. The 2-year gilt yield at one point yesterday was up by almost 40 basis points on the day. We paired that to 30 basis points by the close. And I think there's 2 things here. One is, I would say the bank are clearly not overly comfortable with that market reaction, because within about an hour and a half of the decision dropping, Governor Bailey was on the television. Give you an idea of how hurried that appeared to be. I think Faisal Islam, the BBC's economics editor, was interviewing him while wearing a T-shirt. So he didn't even have time to put a proper shirt on to do this interview. Governor Bailey was cautioning against...
Maybe that was a fashion choice.
Well, maybe I'm not as Zach's here, so he's going to slag me off my shirt anyway. But as most know, I am not one to comment on fashion.
I'm not saying that's the reason I teed it up, that I saw Zach in the comments, but yeah, maybe.
Oh, dearie me. So, yeah, Governor Bailey was cautioning against taking what he called, making, I should say, strong conclusions about the potential for a rate hike. He was also saying that the context is, quote, very different from where we were in 2022. That kind of fell on deaf ears, though. If you look at where the market is trading this morning, we now have 65 basis points worth of tightening priced into the curve by the end of the year, with money markets assigning about a 60% chance that the BOE will deliver a hike hike as soon as the April meeting. And, well, really, this comes back to something that we were talking about earlier in the week. I wrote a note on this earlier in the week as well. Frankly, this has policy mistake written all over it. I think we're at the point where the Bank of England are clearly on hold at best for the foreseeable future. They're probably not going to be able to cut all year now, given their expectations for inflation. So that alone would leave policy too tight into what's going to be quite a significant negative demand shock. And if they go down the path of raising rates, hello, what are you on about?
So I was just singing.
Oh, I see. And if they go down the path of raising rates, well, I mean, that's just utter idiocy in my mind. Bank rates cannot influence near-term energy prices. The risks of second-round effects are incredibly low, given the state of the labour market and given how anemic economic momentum here in the UK currently is. And yet again, the Bank of England seem to be doing the wrong thing at the wrong time.
I disagree. I think we should hike.
Are you Dickie Matthews in disguise?
I would love to be Dickie Matthews in disguise. What a legend that guy is. Dickie, if you're listening to this, I love you lots. No, seriously.
He really is.
Well, I'm not. No, seriously. But you know.
Well, yeah, correct.
Okay, but you know that I hate the fact that we're in this like ultra low interest rate environment. I want rates to be 5% because we'll still get along swimmingly. I get some money in the system. That's what, just me personally. But then I want to see the world burn, quite frankly.
Well, quite. You do, don't you? Should we do the ECB as well? Because
what you mean? That ECB's kind of right. So I got a good line for ECB: hold, but with a grimace. And I don't mean the big purple monster from McDonald's. I mean like the grimace as an
expression.
Yeah, an expression. That's quite a good way of summing it up,
and
right?
I think it's a very good way of summing it up. Which means it can't have come from you.
Something right.
Who did you steal it from?
I'm not telling you.
It was obvious that you didn't think that up. But yeah, that does sum it up quite well. Obviously, holding the deposit rate steady at 2%. They reiterated that they're going to take a data-dependent meeting-by-meeting approach to things. Lagarde in the post-meeting press conference saying that policy is well-positioned and that they're starting from what she called a good base. That was before she ended the press conference early because she had an aeroplane to catch. So God only knows what's going on there. The one thing I would say, just in terms of the ECB, though, is their updated round of economic forecasts. Firstly, it's not conditioned on all of the energy price shock that we've seen, because obviously they have to take a snapshot of market assumptions at some point, and markets have moved on since then. Regardless, they do see headline inflation rising to 2.6% this year before fading to 2% in 2027 and 2.1% in 2028. Obviously, take that with a huge grain of salt, given how uncertain the outlook is at this moment in time. But what I would say is that inflation profile is conditioned on what the market is pricing in terms of interest rates. And that equates to about 40 basis points worth of tightening in the inflation forecast to get to 2% inflation in 2027. And I think that's why we had those sources stories yesterday afternoon, while I think probably everyone in London was at the pub, which noted that officials at the ECB see the possibility of a rate hike at the April meeting, but that the move at that stage is likely to be too soon, and June is more likely when a rate hike could be delivered if the ECB want to go down that path. Again, I think everything that we just said about the Bank of England, or that I said about the Bank of England, applies to the ECB as well. But the ECB have got a history of policy mistakes. They hiked just before the GFC. They hiked just before the sovereign debt crisis. So I guess there's probably nothing to stop them doing it again.
Well, no, quite. Yeah, it's a very interesting one. To be honest, I'm quite liking this because it means that central bank meetings and whatnot, they're all in play again. Everyone's live, so to speak, which I quite like.
Yes. They are very much live.
Well, it's good for me to say they're live sitting here with no positions on. But
I was going to say, pray for strategists who've got to try and come up with a view on all of
it.
And people who are trying to trade it.
Yeah, I was going to say, pray for the Stirs desk. To be honest, the strategists can go fuck themselves. Question.
All right.
Sorry, my dear. Sorry. One thing that we haven't had a proper rant in a while, but I'm going to have a little one. Well, I said in a while. It's been 24 hours.
Yeah, literally.
Ed Miliband. Okay, I mean,
he's not setting interest rates now, is he?
No, but what an absolute twat. he's come on and gave this big announcement about how he's going to, I recognise the energy crisis is driving up energy costs, but we're here to help families in the UK. We're going to commit a whopping total of £50 million, and that's with an M, to alleviate energy crisis. This is like a quid a household. It's like, I tell you what you can do, mate. God, you are typing really aggressively.
No, the Bloomberg keyboard is just loud.
Yeah, okay. Oh, right. Show off. You got a Bloomberg channel. Oh, yeah, get over yourself. But you know what I mean? Like, this 50 million is fuck all. It's a quid a household, basically. Well, roughly, I'm guessing. What he could do to alleviate the energy crisis is allow them to fucking start pumping oil and gas from the North Sea. At what point? It's like, it was Merrin from Bloomberg, Merrin Somerset Webb. Absolutely amazing follow, amazing podcasts that she does with our good friend John. As she said, she retweeted a little while ago, his position is now untenable because it's clear he doesn't even want to listen to. He doesn't want to even listen to arguments from the other side of the table anymore. He's got no interest whatsoever in alleviating the UK's energy crisis. And it's absolute bonkers. And to say 50 million will sort it out and help families is quite honestly an embarrassment. And it's really wound me up.
No, I think you're absolutely right. And, well, I mean, it's only marginally better than him talking about serving warm lager.
Don't start
idiotic suggestion. But, you're absolutely right. I mean, it's just shambolic, isn't it? But we've kind of come to expect it.
Question for you. The ECB has a much cleaner kind of starting point than the BOE before the war. Do you, we're seeing this massive differential now between like funds and gilts and whatnot. Do you think the gilt market's overcooked, or do you think it's it's a sign of things to come with volatility? It's going to stay in the market.
Well, I think volatility is definitely going to stay in the market while we're going through all of these geopolitical shenanigans in the Middle East. Is the move in gilts overdone? Yeah, I think it absolutely is. I would not be. I think there's from memory, there's about 3 or 4 MPC members due to speak next week. I wouldn't be surprised if they kind of try and continue the damage control exercise, basically, that Governor Bailey went on yesterday. It's a difficult one because, to a degree, the move that we've seen in STIRS, the move that we've seen in gilt, will have tightened financial conditions, which does do some of the bank's job for them in terms of leaning against potential second round inflationary effects. But I do think that they are very much of the view that the market's probably got the wrong message here. I think Alan Taylor, one of the external members, actually put it quite well in his paragraph in the minutes, where he was saying that we shouldn't really be inferring a directional change from the decision, i.e. the bank aren't going to suddenly go on this elongated tightening cycle. It's more a case of just waiting and seeing what's going on.
Yeah.
Which I think is ultimately what the core of the MPC want to do. They've just communicated it utterly terribly.
Yeah, well, this is the thing, because they communicated it so terribly. I know we've got speakers due next week, but I would not be surprised at all to see some BOE MPC members on the wires today, just kind of putting some sound bites out there ahead of the weekend.
Yeah, no, I certainly wouldn't be surprised at either. It's often the way with things like this that they do want to kind of get ahead of it relatively quickly.
Yeah.
So, that kind of took up most of the attention yesterday. I mean, the other thing, obviously, geopolitical events continuing. We did have some comments from the Israeli Prime Minister Netanyahu, was basically talking about how Israel and the US have destroyed Iran's capability to enrich uranium and make ballistic missiles. There was also some reporting around the idea that there will be no further strikes on Iranian energy infrastructure, although the Iranians have continued to attack other energy infrastructure within the Gulf. The other big headline yesterday was, according to Politico, citing their sources, the White House has told oil executives in the United States that they are not planning to implement a crude oil export ban. This is something that had been not really rumoured, but a few people have been worried that it might be on the cards, given Trump's kind of view of we don't need Hormuz.
You know where this kind of this rumour started about they might be kind of curtailing the export of WTI, basically. It started from an RBC note.
Oh, is that where it was?
Yeah, it was an RBC note, like research note, that was put out by Bloomberg, but the headline Bloomberg, rather than say RBC says, or says that they might do it, they put WTI export ban being considered.
But for God's sake.
Yeah, it was a complete balls up by how Bloomberg kind of decided to put the headline from the research note.
Jesus
Absolute
Christ.
shocker.
What a shower. Yeah. Anyway, less said about that, the better, I think. But yes, that's seemingly off the cards for now. But again, as with all of this, it's a very fluid situation. So if you listen to this in about an hour's time, then maybe it'll be back on the cards again. Who knows?
Exactly that. Any thoughts for ahead of the weekend?
Yeah, I mean, actually, the data docket is completely and utterly empty. All we've got on it is Canadian retail sales that no one cares about. We're going to have a whole host of ECB speakers because they always like to speak the day after a decision. Fed Governor Myron is probably going to have a chat at some point as well to explain his dissent. And yeah, I guess the only other thing is just, bear in mind that as we've seen over the last couple of weeks, we've tended to have some de-risking as we move into the weekend. It's also triple witching today, I believe. So bear that in mind.
Quad witching on some products as well.
That is very, very true. So bear that in mind. And also just the potential for any gapping risk when the market reopens on Sunday night, Monday morning, depending obviously on what does or potentially doesn't happen over the weekend, which sadly, I don't have a crystal ball to tell you exactly what that's going to be. But I think it's another one of those weekends where if you can be flat, there's absolutely no harm in being flat. Get some rest, get some time off the desk. And if you want to go and put those positions back on Monday morning, then go and do it.
And indeed, if you want to go down the beer garden, you know where to find me.
And wear Factor 50.
Yes, quite. Or at least put a baseball cap on if you're bald as a coot like Michael Brown.
Actually, it's funny. I should have worn my Aston Martin Formula One team.
I don't think anyone wants to be associated with Aston Martin anymore.
No, they don't.
Moving swiftly on. Michael,
before I incriminate myself.
Yeah, right, exactly. I'm like, what can I get away with saying? Not much. Michael, thank you as always, my dear friend. Listeners, thank you so much as always. We hope we put a smile on your face and a bit of value into your morning. Yeah, and whatever you're up to this weekend, keep it tight, stay safe, and we'll see you all on Monday. Much love.
Indeed.